So the Fed cut rates again. This latest quarter point drop brings the Fed benchmark down to 3.75 to 4%. But here's the twist. Powell basically threw cold water on the next December cut, saying it's not a foregone conclusion, far from it. Markets had been pricing in a 90% chance of another cut next month, and that has now dropped to 67% after his comments. The Fed is also ending quantitative tightening on December 1st. They've trimmed about $2.3 trillion off their balance sheet, and they're calling it done. I'll explain why this is a big deal. Hi, I'm Jessica with the Genung team in Real Broker, and I'm a real estate agent here in the Temecula Murrieta Valley. Thank you as always for stopping by my channel, where we put out a new video every week telling you everything that you need to know about buying and selling property in our valley. Let's get to it. Quantitative easing and quantitative tightening. Let's break this down without the technical Fed jargon to make it simple. Quantitative easing, often called QE, this is when the Fed basically prints money to buy bonds. They're flooding the system with cash. Why? Usually during an economic crisis or a recession, when traditional rate cuts aren't enough, they buy treasury bonds, mortgage-backed securities, whatever, and the money goes into the banking system. More money flowing around means that there's going to be cheaper borrowing, higher asset prices, and theoretically more economic activity. It's the Fed's emergency fire hose. Quantitative tightening, or often called QT, this is the exact opposite. The Fed stops replacing bonds as they mature, so their balance sheet shrinks. They're pulling money out of the system. Think of it as putting the fire hose away and letting the puddles evaporate. Less money sloshing around means tighter financial conditions, which helps cool down inflation, but can also slow growth. Here's the thing people miss. QE inflates the Fed's balance sheet. They went from under $1 trillion before 2008 to nearly $9 trillion during COVID. QT is the Fed trying to get back to something more normal. They just cut $2.3 trillion and now they're done shrinking it. Bottom line, QE means the Fed is adding fuel to the economy. QT means the Fed is draining the tank. Both are about controlling how much money is in the system beyond just moving the interest rates around. Getting back to the rates and the housing market, let's wade into the fog analogy that Chairman Powell keeps using, which is why we brought back this thumbnail from a few months ago. As we all know, the Fed cut rates on Wednesday like everyone expected, but mortgage rates, they actually went up from 6.13% to 6.27% right after Powell's press conference. Why? It's because Powell's comments on the anticipated December cut, and the market had to reprice expectations fast. Powell literally said, what do you do if you're driving in the fog? You slow down. He's talking about the government shutdown. As of the making of this video, we are in week 5 now, and there is no economic data coming out. Some would say the Fed's flying blind, or at least vision is limited. That data fog means that they're getting cautious and mortgage rates aren't budging much until that clears up. The cut was already priced in before the October meeting, so if you're waiting for more rates to drop, you might be waiting for a while. Expect rates to bounce around between now and December. If the shutdown ends and we start getting labor data and other key reports again, rates will react every news cycle and every economic development. Markets are going to whipsaw day to day and week to week as we all try to figure out what the Fed's actually going to do in December. That data fog and government shutdown is keeping everyone guessing, and mortgage rates are going to move with every bit of news. It's going to be a bumpy ride. Here is a post by Lawrence Yun, chief economist at the National Association of Realtors, looking at the prior government shutdown, December 2018 to January of 2019. He says, the closing activity took a hit. Disruptions from IRS income verification, rural home mortgage loan shutdown, flood insurance availability, etc. The new home sales contract signings, though, were less impacted because the disruptions are more related to home closing. Yoon is optimistic, and he says once the shutdown ended and with descending mortgage rates, home sales rose. Let's hope he's right, because our next article headline tells the story of what we have observed for weeks now. The shutdown's main impact on housing so far? Buyer confidence. Mortgage rates have dropped to a 12-month low, but pending sales have also fallen, an indication that buyers are cautious as the government remains shuttered. Potential homebuyers' economic concerns appear to be the biggest driver of lackluster demand as the federal government shut down. All right, let's pump the brakes on the doom and gloom for a second, because there's actually some good news here if you are a home buyer. This market is your market right now. Sellers are sitting on listings longer, competition has cooled off, and that means that you have leverage that you haven't had in years. You can negotiate, you can ask for concessions, you can actually take your time and not feel like you're in a bidding war every weekend. And here's the part that does not get talked about much, and it should. If you are a contingent buyer, meaning that you need to sell your current home before you can close on your next one, sellers are much more open to that now. A year or two, or certainly 3 ago, forget it. Contingent offers were getting tossed aside because sellers had 5 other offers with no strings attached. Now, with slower activity and fewer offers coming in, sellers are willing to work with you. They want to get their home sold. So yeah, rates aren't at rock bottom and the market feels uncertain. But if you are ready to buy, you are in one of the strongest negotiating positions that we've seen in quite a long time. Sometimes the best time to make a move is when everyone else is sitting on the sidelines. Warren Buffett actually has a quote about that. Be fearful when others are greedy, and greedy when others are fearful. I'm taking my own advice and have started the search for my next investment property. Okay, let's get into our local stats. As always, we are looking at single family homes only, so no condos, townhomes, or land, etc. We're trying to get this video out right after Halloween as October rolls into November. Sometimes the data can change slightly when a listing agent sometimes forgets to change the status in the MLS to sold, especially at the end of the month. So this is why we often wait a week or two before doing our video, or at least that is our convenient excuse. We are working on trying to get you these data videos quicker.
Starting with median sales price in Menifee, we have a month-over-month decline in the median sales price to $4,500 is the decline, or 0.8%. Median sales price in Menifee is currently $588,000, and that is actually year over year an increase of $500 or 0.1%. Median sales price in Murrieta month over month is up 2.1% or $15,000. So good bump in Murrieta. That's our only increase of the cities that we analyze is in Murrieta, up 15,000 year over year. Murrieta has a slight increase of 5,000. Median sales price in Murrieta is currently $715,000. This is what we've been seeing for months and months. Menifee's basically $600,000, Murrieta is basically $700,000, Temecula is basically $800,000, just to give you a rough ballpark on the difference in prices between the 3 cities. Moving on to Temecula median sales price, month over month, there was the largest decrease in Temecula of 3.4% or $27,500. And Temecula also has the largest decrease year over year of 4.8% or $39,800. And this is typical of what we see. Temecula pops up and down. It's like more dynamic than the other 2 cities we've noticed. So we see larger gains and larger falls. But this is just kind of the typical Temecula price bouncing around. So median sales price is $782,500 in Temecula, which does seem to be trending down because they've been around 800 for many, many months. They've been as high, I think I saw 845. I believe it was in 2024, guessing here that they hit the peak. Moving on to number of closed sales in Menifee, month over month, they are up to 4.1% to 127 sales. Year over year, that's an increase of 11.4% or 13 homes. So these numbers are across the board here fairly flat. We're just up a little, just down a little on number of closed sales. So market's just kind of slugging along as it's been doing for a couple of years. So there's no huge news here. But let's take a look at Murrieta. Month over month, you have an increase of 15 closed sales or 16.9% month over month. And year over year, you have an increase of 8 closed sales or 8.3%. Temecula, month over month, has our only decrease, which was 8 homes or 7.3%. But year over year, number of closed sales in Temecula is up 8.5% or 8 homes. Moving on to median days active in the MLS. So median days on market, basically. Starting with the city of Menifee, month over month, there is an increase of 7 days. This slide is actually the biggest news of all of the numbers that we analyze. Median days on market is up quite a bit across the board. So it's definitely taking longer for homes to sell. So again, Menifee, month over month, is taking 33 days to sell, which is an increase of 7 days, and year over year it's taking an increase of 12 days to sell a home in Menifee. Moving on to Murrieta, month over month you have an increase in the days on market of 6 days, and year over year you have an increase of 14 days. It's taking another 2 weeks to sell a home in Murrieta. The trend continues on to Temecula, which is taking the longest for homes to sell. 38 days is the median days in the MLS for Temecula. That's a month over month increase of 6 days and a year over year increase of 19 days, which again is the largest increase of the 3 cities that we analyze. So 38 days on the market on the median is not bad historically, but certainly compared to the last many years, it's taking much longer to sell a home. Moving on to active listings, starting with Menifee, month over month, you have a decrease in active listings of 41 homes or 8.1%. Year over year, you have an increase in active listings of 33 homes year over year. These numbers across the city are bouncing around, by the way, so we've got some up, some down. It's a little bit of a mixed bag. Moving on to number of active listings in Murrieta, month over month, there is a decrease in the number of listings of 44 homes or 10.6%. So you have fewer homes to choose from in Menifee and in Murrieta, and also Temecula, month over month, is declining as well as far as the number of active listings. Year over year, number of active listings in Murrieta is up 17 homes. So compared to last year, you have a little bit more to choose from in Murrieta. That is an increase of 4.8%. Lastly, we'll take a look at Temecula's number of active listings, which are down the most of all the 3 cities. I don't know if you're noticing a trend here that Temecula, again, is a little bit more dynamic than our other 2 cities. But month over month, there is a decline of 64 active listings or 16.5%. Year over year, Temecula has our only decrease in inventory and number of active listings of 10 homes, just a small decrease or 3%. Okay, last group of slides that we're going to look at is new listings, number of new listings. So this is our new inventory, starting with Menifee, month over month compared, so October compared with September of this year, there are 37 fewer new listings. That's a decrease of 18.4%. Year over year, there is a decrease of 20 new listings or 10.9%. We like to look at months of supply here at these final slides as well. This is a number that we've started tracking over the past couple of years. Months of supply means if no new inventory was to come to the market, how many months would it take for all of the available active listings to sell through? And in Menifee, that's currently 3.4 months. So we're definitely leaning towards a balanced market. Certainly once you get into 4 months and 5 months, then you're in a pretty solid market. Definitely 6 months, but we have not been there in our area since I can remember. So I don't anticipate that happening, but it certainly has gotten a lot better for buyers. If you go back and look at our videos from years ago during the pandemic, I mean, there were months where we had like 0.7 months of supply, like less than 1 month of supply. So 3.4 is definitely making things a little bit easier and less competitive for the buyers. Number of new listings in Murrieta month over month is down 42 homes or 26.8%, which these month over month decline in new listings, by the way, this is what we typically see seasonally. We should start to see fewer new listings as we roll into the holidays as well. That's what I anticipate for the November, December, and January numbers. Listings should continue to fall, and then it's basically around Super Bowl, around the end of February, beginning of March, that things really start to pick up for the spring selling season as far as our inventory goes. Year over year, number of new listings in Murrieta is down 32 homes, or 21.8%, and the months of supply is the highest in Murrieta at 3.8 months of supply. New listings in Temecula month over month are down 13 homes, or 10.8%, and year over year, number of new listings are down 31 homes, or 21.7%. And months of supply in Temecula is currently 3.5, which is right in between Menifee and Murrieta's months of supply. And that we did see a few months ago peak at 4 months of supply in Temecula. So that's down off the high.
Hope you found this video helpful. We'll see you next week. Thanks for watching. Bye.